Brendan and Seth here from the Word Podcast. We're here with Martin Connolly from Northwestern Mutual.
Yes.
And Cliffy Ambrose from Paramount Financial. And we're just going to shoot the shit a little bit about the market today and kind of what you guys are seeing in the economy. I'm sure we'll talk inflation, but if
maybe a little housing.
Oh, maybe we'll talk housing and the housing market. Maybe, you know. And listen, we just love to hear from you guys individually, kind of just introduce yourselves and, you know, how'd you end up in this business? And I'm sure we'll end up with some follow-up questions. Cool.
Sounds good.
Sweet.
Yeah.
Cliffy, you want to start us off?
Yeah, Cliff Ambrose. Live in Danvers, Massachusetts.
Right next to the prep, you told us.
How many people at this table went to the prep?
All four of us.
All
You,
four
oh,
of
you
us.
went too?
Yeah, 1 year.
Oh.
Does that count?
Which
It
year?
counts.
It does.
1 year?
Which year?
Absolutely.
Freshman.
I want to hear that story at some point. Maybe it's not for the podcast, but I have
Certainly dinner.
Good one. I have several friends who only attended their freshman year and were promptly asked to attend other high schools.
Yeah, no, I actually left on my own.
Well, that's good.
But it just wasn't for me.
With your dignity intact.
Mm-hmm. If it makes you feel any better, for 2 solid years, I really tried to get kicked out.
Oh.
And was unsuccessful.
We can talk about that at dinner.
Yeah, that's definitely
I successfully did get kicked out of college, though.
I do know that story.
Anyway, so
Back to Cliff.
4 prep people.
Yeah.
Cliffy, you can continue now. Sorry.
Yeah, no worries. Yeah, left the prep, went back to Beverly High. And I started in this business right out of college. I interviewed at Northwestern Mutual, New York Life, MetLife, all the, major insurance broker-dealer players. And I just loved it. And the initially what I loved is a lot different than where I'm at now, for sure. But the thing that drew me in was I walked in. Well, when I first pulled up to the interview at MetLife, every vehicle in the parking lot was amazing. It was a Mercedes, Porsche, Cadillacs, like just awesome cars. And then I walked in.
Were they all the same color?
Navy blue or black.
Okay. I went to a mortgage broker shop about a year ago and we pulled in the parking lot, all like Maseratis, Mercedes, but they were all white. You're our second go with this.
It's not that we don't know what we're doing. We're still trying to optimize the technology.
Hey, you got to crack a few eggs to make an omelet. We get it.
Hey.
Mm-hmm.
Did you use that one a lot?
No, I just pulled that one out.
Oh, that was good.
It's definitely not original material.
All right, we're back recording here, guys. So
where we left off?
Yeah, just back it up like 30 seconds and you'll be good.
Oh, you only lost 30 seconds?
Yeah, you were excited about other people who are excited about what they do.
That is correct. I love that.
In 6 years, I haven't got out of bed and said, "Oh man, I got to go to work." Not once.
Same.
Like honest, I can say that with full certainty and honesty. And I'll give you an example.
I don't think a lot of people can actually say that. To be clear,
no, people are miserable.
Yes, everybody is miserable, especially right now. Like I feel like people's attitudes and their emotional state, their well-being is like super freaking low right now.
Interest rates are high, the market's down.
Yeah,
everybody's just grinding and it's not going anywhere. So like in our business, especially, everybody is like spinning their wheels.
A lot of panic.
Yeah.
Mm-hmm. Recession coming. Inflation over 8%. A lot of worry out there.
A lot of worry.
There's a lot of words. We'll get to those words.
History repeats itself.
Yeah, cyclical, right?
It just it's part of what happens.
So
it's an opportunity.
It sounds like you
doubt.
started interviewing predominantly in insurance, right? So your business has transitioned from insurance, though, right? Like you don't just sell insurance.
No, I'm full scope holistic planning. And actually what happened was I did an interview at Morgan Stanley. I did one at State Street, but the insurance broker dealer side of things just seemed like a more open architecture to do all financial planning, right? And that's just the route that I took. And like I mentioned, like what drives me is helping others. And the other day I met with a retirement planning client. And like I said, she didn't really know where she was, like where she stood. And my team put together a great plan for her, like a pre-plan. Just kind of meet with her and kind of give her an idea where she is now and whether she can retire in 3 years, 5 years, 7 years. And when we showed her the proposal, her and her son-in-law and daughter all cried.
That's crazy.
Because she's in such a good place.
Does that make you uncomfortable when they cry?
No.
Oh, I hate it when clients cry.
I actually feel like you're slightly getting emotional because like you remember that moment. And
I
like
almost cried.
And no, like, and like how important it was. Like you could see it on your face.
Yeah,
like,
you can.
Yeah.
It's so important to you to do that for somebody else.
Well, it's that uncertainty, right? And that fear that people live with. And it's hard to like kind of grasp, like, am I going to have enough money to live to 90, 95? Is it going to be enough to pay my expenses? All these things, all these questions that people can't, keep people up at night. We kind of showed her like, everything's good.
That's awesome.
You're actually really good. And it had nothing to do with us because she's our new client. We had to transition a lot of her portfolio. She was heavily invested in aggressive areas, and we had to taper that back and show her that it's time to hit some singles and doubles. We don't need to hit home runs. And then, the tears flowed, ideas flowed, and here we are.
Do you classify yourself as an empathetic person?
I have empathy.
Oh, that's a good skill.
I have empathy.
Have I ever told you I have a couple coaches? You know that, right?
Like 3 or 4.
Yeah.
You have like 1,000.
Yeah.
coaches.
So one of my coaches had me do this test. It was called a skill builder or skill finder or skill something. And it basically judges you on list your skills and like where you fall on each skill. And there are like 31 skills. I was 29 in empathy. And she thought that was a problem.
Strength finders.
Yeah, strength finder. Yeah, strength finder.
Out of how much?
31.
Were you high on woo?
I was high on woo.
Me too.
Yeah.
High on energy,
High on energy.
self-confidence.
Yes.
Yes. Yeah.
Low on empathy.
Classic
Scale was to
narcissistic behavior.
31.
Whoa. What?
The highest possible, like the most empathetic person on
Would
the
be
planet,
like
31.
No, 1.
Yeah.
Oh.
I don't see that. I thought you'd be more empathetic.
Apparently I'm not. But I'm
I had you at,
impressed
like,
that you
17.
Thank you. That means a lot. I was impressed that you were like so emotional talking about this woman, cuz it makes me cringe when I meet with a client and they cry or like they get emotional and I'm like,
I feel like that might be your whole business.
it kind of is a big part of it and I get very anxious.
On which side of the business? though?
On the estate planning
Estate,
side.
for
Yeah,
sure, yeah.
nobody cries at real estate stuff.
Really?
I mean, some of them do.
Sometimes tears of happiness.
Yeah,
But
even that
unlike-
makes me uncomfortable.
Yeah, unlikely.
Yeah. Emotions generally make me uncomfortable. I mean, I should probably talk to my therapist about that, but
Probably.
Yeah, we'll get there.
We can say that that's an opportunity.
Yeah.
Yeah, for growth.
All right, so we've spent a little bit just introducing Cliffy
Yeah.
and his business a little bit. Martin, can we just hear from you quickly? Obviously, we already talked about Northwestern Mutual slightly, but just tell us how you ended up in this business.
Sure. Great question. So I started this business about 9 years ago. I was a career changer. My background is I'm an estate planning attorney by way of education. That's right.
I literally didn't know that.
I'm in recovering attorney. And
You went to law school.
I did. Graduated law school in 2013, passed the bar first time. And at that point, the legal
Dude,
market was not great. And so as I looked out at the landscape of opportunities, I had the option to go
What
work.
color is that painted in, that landscape of opportunity?
Great question.
Red.
I see blue and green.
Okay.
So I looked out at that landscape of opportunities, and my options were, I would say, in the legal market, not good and really, really not good. So I wasn't going to go to a Ropes and Gray. I wasn't going to go to what's called a white shoe firm.
So you were not number 1 or 2 in your class at Harvard, BC, or BU?
Correct.
Okay.
Correct.
I don't know what a white shoe firm is.
Those are places that we don't get to visit.
Those are the top firms in the country.
Got
You come to places like Cherry Tree where we let everybody in.
What's the backstory?
Regardless of their shoes. What?
What's the backstory on White Shoe?
I think like fancy, like the blue shoes with the white in the middle, like that old time like
Like,
French
like a
lawyers
tuxedo
wore.
shoe.
Like wingtip shoes.
Wingtips, but they
White inlays.
Yeah.
So if you had those types of shoes, You were fancy, you had money, you had status, you had power, hence that name stuck, the White Shoe Firm. Although I don't believe anybody wears white shoes anymore.
No.
At those big
Especially not after
No.
Labor Day.
Correct.
Right.
And the fact that I had no idea what they were just goes to show you I was never.
You were never welcome. You were not invited. Martin, you can come anytime you want to our Any Color Shoe Firm.
All right.
How long have I known you?
I would say about 5 years.
I literally had no clue.
Do you read his emails? I think it says ESQ in his signature.
It says JD.
JD.
I don't know what that means.
Juris Doctor.
Juris Doctor.
Whatever, man. As we already talked about, I got kicked out of college. So that world is not for me. That's like extra college.
Yes, it is.
Yeah.
I'm all set.
So
That's wild. I didn't know that. I'm so excited.
See, this is why we do this, Seth.
Yeah.
It's always interesting
You
to
would've-
find out like the backstory of the guys that we.
I feel so much better about you as a person. I feel like you should be trusted with people's money.
Thank you.
You didn't feel that before?
No, more so.
Oh, okay.
More
Just
so
layering.
trust.
Yeah.
Layering,
Yeah.
yeah.
Okay.
Yeah.
Yeah. So I had done an internship my last year of law school with Northwestern Mutual, more so to just add something to my resume. Wasn't really thrilled with the paralegal position I had. Thought it was a bit tedious, and the idea of getting out of the office and going to see people was interesting. And I liked the idea that I could control my own schedule versus having set hours. And so as I graduated and I looked at the legal landscape, the jobs that were available were typically not the jobs with the most prestige, the most power. There were jobs where you were going to work 80 hours a week for somebody else and build their book of business, and maybe you earned a nominal salary, right, of $40,000 or $50,000. On the other end of the spectrum, I had this
If
opportunity.
you're out there looking for that job, I'd love to hear from you.
Now hiring.
On the other end of the spectrum was the opportunity to go the entrepreneurship route with Northwestern, start my own business. I was still going to work 80 hours a week, and maybe I was going to earn that same salary, but it was going to be building my business. And having two parents who both own businesses, I come from a line of entrepreneurs, and so that appealed to me, that ability to run my own calendar, have my own schedule, be the boss, appealed. And so that's why I started at Northwestern.
Very cool. That's a great story.
Appreciate that.
Do you ever regret it?
No. Looking back, I think of the folks that I talked to that I went to law school with, I'm probably the person who is the happiest because I'm the one I'm the only person that is their own boss.
Right.
Interesting.
And this is my belief, once you're an entrepreneur and once you're your own boss, there's no going back to W-2.
No,
You
it's
can
really
never do
hard.
it.
It's really hard to even conceptualize what that world would be like. But at the same time, I'm sure all of us, especially right now, are working way harder than we were the year before and the year before and the year. I feel like it's just like, especially in these times of adversity, I feel like it just gets so much. Like I just keep doubling down and doubling down and doubling. I don't know. It's crazy. You can control the calendar, but like I was talking about earlier, I quadruple booked myself. That doesn't happen in the corporate world.
Why are you even touching your own calendar?
Well, this is a problem. I always just say yes to people.
Yeah.
So for instance, like a couple different video shoots, we had to move some stuff around, had to take a call instead of a Zoom, and then someone wants to come back and see the property. At the end of the day, everything I do is to get people to see these properties. So
Yeah.
those are the appointments you just can't turn down.
Mm-hmm.
So I always say yes, and then we figure it out.
There's a great saying from one of my coaches. I, like Brendan, have multiple coaches. So Jordan Montgomery, business coach, coaches athletes, college professional athletes, financial professionals. He always says we grow with our no. So we have to say no to the good things so we can say yes to the great things. So maybe an opportunity for you to grow with your no.
Coach Seth, one of my many coaches, told me at one point the scariest thing that he ever did, and probably the smartest thing he ever did, was hiring somebody when he couldn't afford it, and it wasn't probably the most prudent thing to do.
Very stupid.
Yeah.
But genius.
And maybe you're at that pivotal point again where you might need to hire somebody.
I just did.
Okay.
We're working on it.
All right.
Training.
Okay.
Training and onboarding.
All right. Well, I gave up my calendar, and it was the smartest thing I ever did. So, like, I don't even attempt to calendar things. I don't look at it. I just
that's smart.
Every morning I wake up, I'm like, gee, I wonder what the world has for me today.
I also will revisit my calendar like late at night or first in the morning. I have no clue what's on the docket tomorrow. So I think from some of that stuff, good advice, Martin, nonetheless. Another piece of advice I want to share, a small story that I know I've shared with my real estate team all the time. And it's just a quick story of prospecting. So, and I've kept that one kind of near and dear to my heart as I teach these guys, like, just never stop prospecting for new business, which I'm sure is probably very similar in your role, probably very similar too in yours, right? But so back in the day, and Martin got my phone number from a mutual friend.
We did.
Another client, a friend of mine. And dude, Martin cold called me for what I think was 2 years. I tell people it was about 2 years. That's what it felt like. This dude just would not leave me alone. And so, I remember I was at Best Buy at the time. So I'd be like in New York or Connecticut doing my thing. And like it'd be a random Wednesday at noon and some strange phone number, you know, and like, I didn't used to get a lot of spam. I feel like now that my phone number's everywhere, I get more of it, and so I would answer the phone. It was Martin. And you always did two things that I thought were really, really good. First off, you said, "Hey, Martin, you know, blah, blah, blah." I don't even know what you said, actually, but you mentioned Joel, who's a mutual friend.
Right.
Immediately builds trust, right? So now instead of like wanting to hang up on Martin, he's talking about a mutual friend of ours. Said, "Hey, I talked to Joel. I do some business with Joel. He said I should give you a call." And so I'm like, okay. Like I'm listening just through that relationship building, right? And I literally blocked so many of your phone numbers that were probably like in some CRM dialer, right? Because like you just like this dude was relentless. And you know, another thing you always did was you always, "Hey, any objection to me giving you a call in a couple of weeks, just checking back in."
Right.
Which that question is designed to make me say no, which
Correct.
really means yes.
Correct.
So I really like that because he would always trick me. And then you would call me back and I'd be like, "Fuck, why is this guy calling me again?"
But what's shocking about that is you are one of the best salesmen I've ever seen, and especially with your Best Buy training, that you fell for this shit.
Well, listen, when you ask, "Hey, any objection if we X," your immediate response is no.
Yeah.
You don't even have time to think of it because you don't want to object.
Correct.
And
unless you're me and I'm an objector.
Yeah, well, attorneys, right? So what was so cool about that is, you know, we never really had a long conversation about anything. And the only person when I left Best Buy and I was like, "Dude, I have no idea what to do with my 401k, any of this shit. I need to get it out of here or they're going to move it somewhere that I don't want. Like, I got to call Martin." And so then I pinged Martin because instead of me going to Google or trying to ask around, I already knew this dude has been trying to earn my business for 2 years. I should at least give him a shot. And that was it. And it's so crazy. I tell the team all the time, like, you know,
you talked to your team about Martin?
Yes. I've had him
That's right.
in to talk about it just because I think it's such a cool prospecting story that like literally I hung up, blocked multiple different phone. They're probably still blocked today in my phone. But when I needed him, I had either an email or a text or something that I could go back and ping. So like what I tell the team is like, you prospect until you get the finger and hopefully it's the thumbs up. Right. It's not the other one. So I just really like that story because ultimately it's how we ended up connecting. And then ironically enough, you introduced me to Brendan.
I did.
Right. So imagine if I never made that outbound approach to you from all your inbound, then like literally we wouldn't be sitting here today.
It's true.
That's kind of crazy.
We all have Martin to thank.
You're welcome. So
I guess dinner's on us, Seth, right?
I think it is. Yeah.
So interesting. If you look at the numbers from the Harvard Business Study, they'll always say the sale is made on the 7th reach out or later, almost never made on the 1st or 2nd, right? Attempt to contact somebody. So we are so bombarded by emails and spam calls, right? It's almost an obligation of us when we prospect to follow up with people.
So Cliffy, how do you prospect?
Like I breathe,
Yeah. And what's that?
just naturally.
So you're really good in front of people. Like I've seen you in front of clients, like you're the boss, but like, how do you get to the point that you're in front of the client?
It's a lot different than it used to be.
Yeah.
When I first started, I had to do a lot of that continuous follow-up and cold calls. I think when my very first started, it was a stack of leads. You might be familiar with this. Mortgage protection planning is what they called it.
I think that is the most genius thing, and I talk to Seth all the time.
It's life insurance.
Yeah.
Right.
Yeah. And we would, I mean, there must have been a room full of these leads. And my manager at the time was like, listen, just call all these leads back every Monday and Saturday. And so that's how I learned to handle objections and how to talk to people and to follow up and to, hey, give me a call in 2 weeks. And I would call them in 2 weeks.
Right.
Every time. Right. And I got consistent, and I always ended up booking 10, 15 meetings a week.
That's a lot of meetings.
Yeah.
I knew that there's a math equation in our business that if you book 10 meetings, you see 7 people, you do 4 opens, 3 closes, 3 opens, 4 closes, that some variation of that, you will make 6 figures, hands down, no questions asked. And I've proven it because I spent a lot of time recruiting and coaching people. And so I said this to people, and the 3 people out of the 10 that came in over the last 5 years that I was coaching, the 3 who did it every week, all are still in the business and all made over 100,000.
Well, Seth, don't you have a similar thing with phone calls in your people?
Yeah, it's not as clean cut. So what we focus on is essentially if you end up with 40 conversations, give or take, and obviously everyone's different with the skill or who they're calling, when they're calling, right? But in general, 40 contacts or conversations usually will lead to a transaction. So it's just a recipe of how many times can I talk to 40 different people? And that could be follow-ups, it could be new contacts, whatever. And it's just a numbers game. Well, how many phone calls do I have to make, or emails or texts do I have to, whatever it is, open houses I have to work to be able to talk to 40 people.
It's unbelievable.
And so, it's easier said than done, because most people are only having, I don't know about you guys, but 5, 6, 7, or 8 or 9, if you're really good, percent conversation rate from a phone call. So, you got to call 100 people to get 4, 5, 6, 7, 8, whatever, 10 people on the phone. And again, when you're calling, the call list, the data, whatever, all that matters, right? So really what we're looking for is we have an inside sales team who specifically does a lot of outbound. They have to make thousands of dials a month in effort to just keep, the pipeline filled in the business, right? So, and then obviously the agent should be doing the same, because obviously the way it works in real estate is different splits, right? So if they're procuring their own business, then ideally they get higher, more incentivized. So you would think that they would want to call more people. Sometimes that's not the case, but yeah, it's just and you can literally back into it okay, well, how much money do I want to make? Well, my average price point's X, my average commission's Y. Well, then I just need to call 32,000 people. Easier said than done, you know what I mean? But
that's it.
Yeah. But everything goes in. How many days do you want to prospect? Do you want to prospect 2, 3, 4, 5, 6, 7, whatever? And so usually, this power hour concept of just banging the phone for a little while will always keep you doing business. So what's interesting, we talked about it a little bit last week, is I'm kind of ashamed because in the last 2 years, I just got really freaking busy. A lot of that was market driven, right? Which was great. And now as the business kind of settles back down to a more 2018, 17, 19 type business, obviously in real estate, it's just a lot different. So if we were prospecting like we talk about prospecting the entire time, I have no concept of the volume that might have come from that. So that was a little aha moment. I don't know about you guys, but naturally when you get really busy, you stop doing some of those lead generating activities, right? So and if we just kept with it, it would have been probably a different game right now. You know what I mean?
So our friends in real estate are totally sensitive to interest rates, right? We're seeing the transaction volume plummet. We are seeing prices are starting to shift. We're seeing people are just sitting on the sidelines. We've got this problem of people that are locked into super low interest rates, so it doesn't make sense to sell. We just don't have the transaction volume. We're really stuck in many ways in the real estate business. And, I think Seth talking about this introduction to prospecting, are there things in your business that are similar, that are telltale signs of we got to get back to the basics? Or are there things in your business that they're going to create an environment where you're going to be so busy and the phones are going to be ringing because the market's going down and their advisor isn't dealing with them in the way they want to? Or are there things like that that are going to be sort of boons for you guys as we move into this economy? Cliff?
I mean, part of the other reason that I loved the opportunity of being in this business, financial services, it's recession proof.
Why is that?
people don't have money, they're apprehensive, they're nervous, they're scared. They make transitions to more conservative portfolios. They want to buy insurance. They want to buy insurance-like products. It's just there's always an opportunity, and that's kind of what I was going to say about prospecting. Is I transitioned prospecting over the years into opportunity. Right? I always try to identify opportunities, and so like Seth did with his calendar, my calendar gets filled with meetings through social media, through webinars that are casted for me. All my marketing's done by someone else. I've built a team of people to get me in front of people. And then, being in the business for as long as I have, I'm going to get a lot of referrals. So, I would say 20% of my business is referrals, 20% is new marketing, and then the other 60% is COI. So, like, people that I've built in my circle that are accountants, estate planning attorneys, even other financial advisors who don't do the same business that I do. And that's really what it is. And when it comes to an economy like this, it's just an opportunity to call clients again. And Marty's going to say the same thing, is like, people want to talk.
Yeah.
And when there's
they want to talk about them.
That's it. As long as you can listen, they're going to tell you what you want to hear, and then that's where the opportunity is. And at the end of it, you're going to help them in some way, right? That's why the lady was crying the other day. She's too aggressively invested. I showed her a few different accounts that are very conservative and actually have guaranteed interest rates around them. She was like, wow. And, that's the opportunity. Is like, you just have to have those conversations. You can't be scared. You can't be nervous.
Yeah.
Martin, what are you thinking about the sort of environment we find us in? Is this a moment of opportunity for you and your team?
Good question, Brendan. So as we think about our business and financial services, there's so many seasons. You're going to go through different seasons, right? So we went through a big season in COVID.
Winter's coming.
And a lot of what we do is we are, for lack of a better term, we are the therapists for our clients, right? We're there to ask questions, listen, as Cliffy said, and our clients will tell us what they're worried about. And it's our job to be a guide, right? Knowing all that we know, knowing all that our clients who are older know, right? So working with somebody, let's just say 40s, right? We can share the hindsight of a client who's in their 60s and use their experience as foresight for that 40-year-old client. And so we can lay out best practices and shared experiences, and we can share stories and help educate clients on, based on what you're feeling, right? This is the best way for us to craft a plan to get you from where you are today to where you want to be in the future and relieve that stress and anxiety.
I just want to buy Twitter.
You should buy Twitter right
yeah.
now. But you
should I buy Twitter?
You can't anymore.
On margin.
Oh, on margin? Mm-hmm. Or Tesla. I heard Tesla's
no, literally,
it's
delisted, isn't it?
It's gone
Did you take it private?
Yeah.
Oh, I thought you meant actually buy the company.
Oh, no, I don't have that much money.
Elon just bought it.
Yeah. Discount.
So I would say, Brendan, answer your question, right? There's always seasons. We're entering into a season where the economy is going to slowing down. We're probably entering into recession based on what economists say in 2023 at some point. Maybe it's early 2024. Markets have obviously been devalued for the entire year. Inflation's high. So our job is to help tap into those, right, problems for clients, show them this is how you can solve that, right, in a way that aligns with how you think about planning. And hopefully, if you do your job well, you give your clients a permission slip of sorts to go ahead and live their best lives, right? A permission slip to understand that even though the market's down right now, things seem bad, this is just a short-term cycle. We're playing a long-term game.
Am I forging my dad's name on this permission slip, or is it like just a regular permission slip?
No forgery allowed.
Okay.
And
notarized.
Am I the only one that used to do that?
No.
Yes.
No. Okay, good.
No. 7th grade Martin also forged a document one time.
Oh,
Yeah.
Okay. I can't wait to hear.
Is that a dinner story too?
I don't know. It might be. only Martin can decide that one.
Just your typical report card.
Cool. Progress report.
Progress report.
Yeah.
Forgery.
Do you remember those from St. John's when they would give you like the paper progress report and you had to bring it home to get signed?
I don't know that I remember.
Oh, I remember signing one kid's in like the parking lot, like as his mother. Yeah.
Good story.
He's a cop now.
And you're an attorney.
Yeah.
So yes, to answer your question, there's a huge opportunity now because there are a lot of advisors, right, who have gotten older, gotten complacent, and aren't serving their clients. And I think ultimately, at the end of the day, clients want us to reach out. They want us to be proactive. They want us to know that we're thinking about them. And ultimately, people just want to know that they're going to be okay.
So that's a great point. And I think that you guys are definitely in a business that I'm assuming we'll see some attrition, right? So Seth's business is starting probably to see attrition as well, but I think from a different phenomenon, right? Like a lot of people got into real estate because it was this sexy thing that they watched on Selling Sunset or $1 Million Listing, and like it was hot and like it just was easy, right? When the world was money was cheap and people were buying and selling houses, like it was easy. Now it's hard and we're seeing people get out of it. I think in your business, and correct me if I'm wrong, but the attrition is going to be because the average age of an investment advisor is significantly older. And as we go into another recession, like, do you anticipate those older guys and girls just saying like, I'm done, like I'm out. I've been through 4 of these. I don't have another one in me.
It's a good question. The average age of an advisor, I don't know exactly, but I believe it's mid-50s. It could be wrong. It's certainly over 50. And so we are an aging demographic of financial advisors. There's a massive wealth transfer that's going to happen with baby boomers transferring wealth to the next generation. And so
make it rain. There's
huge opportunity to be there for clients, to work with the next generation, to ask, hey, how are mom and dad doing, grandma and grandpa? The last thing you want is to go into retirement and have your advisor retire before you. So it does behoove individual investors to make sure that their advisor has a succession plan, ask about it, and if not, I think it is part of your responsibility to go and look for a team of younger advisors that can guide you through your 60s, 70s, 80s, and beyond.
Yeah, I agree. Average age advisors, I think 57, 58, and there's the opportunity. The opportunity that I'm trying to take advantage right now is that we're having conversations with different advisors that are of that age or are a little older, and we're talking about acquisition, which can be tricky, right? Because those are clients that, it's a personality thing. Are those clients going to gel with you? But there's a stickiness to an acquisition that you can make it work. So that's an opportunity as well. And like Marty said, that wealth transfer is going to be incredible. And I don't know if this statistic is real, but I think 70% of the transfer is going to women. And so I think if there's women listening, there's a huge opportunity for you maybe to enter into this business, because sometimes women want other women's opinions and help. And like that could be a huge opportunity for women that may think about entering into this business.
So you guys just said a bunch of really cool stuff, and I was just taking some notes down here, being quiet for the first time.
I've never experienced this.
So, so there's some similarities in the business of real estate and wealth management, financial services, because the average age of a realtor it's over 55.
Wow.
Also very heavy, kind of women-focused industry, right? So, I'm interested to talk. How do you target other people's business, like you just talked about? So acquiring other financial services firms is what you're talking about, right?
Yeah.
And their book of business, right? So what does that look like in your business? I'm just kind of curious, because part of the topic, it's very selfish why I'm asking this, part of the topic is a very similar acquisition of other small real estate teams right now, mainly because of that aging demographic, right? So right now, as we're hitting a real estate slump where I'm working harder, a lot of realtors are just going to punch out. Right. And we've already lost some people at the firm here just because they can't make ends meet and they need to go back to, full-time jobs, whatever. And we expect that to happen. We do, again, expect a mass exodus of the business right now, because all the service people who hopped in the business last couple of years, pandemic driven, made some easy money in the best time in real estate ever. And now it's hard. Right. And now the pipeline's drier. And if you just think about in general how the real estate industry is driven, so many people built their business on like Zillow. And now that those clicks don't exist, like there ain't nothing to do. Okay. So I'm looking at several small real estate teams to potentially acquire. And so I'm very interested in the similarities of the business, how that works. Are you paying to acquire? Like, and then your point, I know I'm just unpacking a lot right here from my notes, but like, how do you keep that, relationship sticky? Like you said, right? So when you pay money for someone else's book of business, what's stopping them from just, exiting and going elsewhere?
Golden handcuffs.
Do not compete.
Yeah.
It's insurance policies, right? I bet our insurance friends could sell us a policy on that.
So I'm sure that's probably where the business differs a little bit, because there's nothing stopping me from acquiring a small real estate team and their clients. I can't bind those clients to work with me. I can stop that agent from continuing to work with them, sure, but that's hard.
Yeah.
Right. So how's that transition plan look like? Yeah.
So you need to be values aligned, I think, with the person that you're buying out, right? So you need to be values aligned. The studies that I've read say that the best M&A deals are the ones where the team that's being buying out stays on for a period of time. There's a continuity plan. There's a transition plan. You have the opportunity over the course of a year or several years to meet the new customers with the previous team. Right, there's a handoff that happens, and then that is, again, based on studies that I read, the stickiest way to create that M&A transition.
Yeah, I think the challenge is, I think what's going to happen with you, Seth, is that real estate is fully transactional, whereas the business that we're in, a lot of that is residual. Right?
It's sticky by design.
Well, if you manage assets, there's a value to that book of assets, right? If you get 1% on average for those assets, right, and you have 50 million, that the book is worth X, right?
Right.
Per year. So you can actually go to a bank and finance that.
Sure.
And build a succession plan with that advisor to have it transition over to you. And it's going to be a lot stickier, right? And we know that the money's there. It's a flow of business. We looked at acquiring some insurance book of businesses, people who are purely in the insurance space, like life insurance and fixed annuities. And there was no way to put a value on the book. It's just a bunch of names. And there are relationships that this advisor had, but at the end of the day, it's a list of names. And then how do we put a value on that, right? Whereas, assets have an actual value. It's a,
no doubt,
revenue stream. So
I like revenue streams.
I love revenue streams. Anything that has consistent flow, like you can put a value on and then say, all right, even if I lost 30%, I'm still going to net this much money. It's very business,
right?
Driven. Acquiring like other teams that are in the transactional side of things, I would say it's going to be very difficult, unless you're saying possibly acquiring real estate agents.
Yeah, so the way it works a lot of the time, so more real estate teams are sold than brokerages now. I don't know the stat, but it's a multiplier for sure. And there's still ways to put value on it. Like obviously have to have really good books, and it's 3 to 5 times actual operating income and stuff. But I guess the point that I was trying to make is like, if I go buy, Brendan's real estate team and
it will be very expensive.
Fold them all in. There's other than sure, like some obligatory non-competes and whatnot. Like it's just really tough to make his past clients work with me on another real estate transaction when we know that frequency is so scarce. 5 to 7 years is when people are transacting unless they're investors or whatever, right? So it's just interesting. Like first off, we're paying less money for it, no doubt. Because it's off the operating income, but it's just harder. Like people work with me because of me, not because reference real estate. You know what I mean? So it's an interesting thing to potentially outlay cash on and then, try and create a good relationship with those past clients. Cause really they're just leads. And so, your point of the merger and acquisition point, there's this really good book called The Golden Handoff in Real Estate. And it's basically, again, if I'm buying Brandon's team, hey, all the transactions that we do, I'm just going to you're going to introduce me as your succession plan, right? You're going to still be on to talk to these clients if need be. But every single time you get pinged or your database pings anybody, it's pointing back at me. And then I basically say, hey, Brendan, every deal I do on your behalf, I'm going to give you 75%, which is, probably the oblong way about it. In year 1, year 2, 50%, year 3, 20%, year 4, that book's mine. Right. So I'm working at a much lower split, so to speak, for a period of time. So you can literally sunset your business. And at that point, those people.
But I don't really have a business. I have a list, right? in this scenario, unlike these
using
guys,
you hypothetically.
Yeah, no. But like, unlike these guys that have assets under management and life insurance premiums that are being paid annually, right? Like they have a real thing.
Renewals.
Where they have residual income.
Right.
Whereas with an agent or a team of agents, like they just have a list, right? Unless that agent's going to stay and hustle and like put their volume through, and you're going to take a piece of their volume, like it really, you're just buying a list at that point.
Yeah, hypothetically.
There's some value in the human capital, right? And that person's name and reputation, right? Personality. So I think the way you laid it out, Seth, makes sense logically that you would come out as a team, right, to clients and saying, this is the Seth and Brendan real estate team. And that's how you transition, right, the book that you're buying to now your book.
Cool.
Yeah.
You guys want a break for a few?
Sure.
Yeah.
Cool. Yeah. Hey, dude, no one can fucking understand what you're saying. Like, you need to figure this out. Because I was just super thick, and got some coaching to put some polish on it. And then, I built this, corporate persona where, now that I'm doing something in a work environment, I couldn't talk with a Boston accent if I freaking tried. But to get mad or have a couple high noons, then it might be a different story.
Might slip out.
Yeah.
Yeah.
You can get Marty to do it.
I'm sure, yeah. And it happens a lot around who I'm with.
Yes.
Right. You put me with a couple of friends from...
Right. Your environment.
Yeah.
Yes.
It's very weird.
Yeah.
It's probably I probably should talk to somebody about this. I feel like it's a problem.
Being a chameleon?
Yes.
Could be
maybe.
a strength.
Maybe. You say it could be a strength?
Being a chameleon?
Yeah.
Yeah.
Chameleon has such a negative.
It does have a negative connotation, but it shouldn't.
Shapeshifter.
Right? No, it's just the ability to recognize your surroundings, right? Understand who you're with, and relate to those people. So,
is it like a goldfish growing to its bowl?
Sometimes the stuff you say is just really something else. Let me tell you.
I think that analogy just missed the mark.
Yeah,
by
a small nautical mile.
I'm always trying.
You know what else is a really bad connotation is manipulation.
Okay. Are we? We're recording again, but let's, let's 100%. Talk about that.
That's good.
Yeah. Why is manipulation a
when you hear it,
negative connotation?
When I'm manipulating somebody, it sounds bad, but sales in general is mirroring and ultimately asking appropriate questions to solicit a response. Some people could call this manipulation.
But do you know where sales comes from? The etymology of the word? It actually comes from the old...
certainly do not.
The old English.
Can you define etymology?
Sure, the definition of a word. So,
did you learn that as an English major?
I did.
Feel like I shouldn't come to dinner with you guys. I'm feeling very low on the totem pole right now.
So there's a great book by Bob Berg called The Go Giver. I don't know if anybody ever read it or heard of it.
Let me write that down.
If you haven't, you should.
The Go Giver?
The Go Giver.
Is it on
Giver?
Are you going to ask if it's on Audible?
Audible.
Couldn't tell you. I have a paper copy.
Of course you do.
But sales comes from an old English word, salon. That's where it derives from. Which
I know
means
that one. Living room. Oh.
To give.
Fuck.
So the root of sales is a giver, right? That's why hence the name of the book, The Go Giver.
So is salon a Latin word?
Old English.
English.
I don't know if that derives from Latin.
Are you fact checking, Cliffy? I hope you are, because
no, I think he's just
he's
checking his Instagram.
No.
So
I'm just
tell me,
looking at these words. I'm mind blown.
Oh, which one are you mind blown by?
Etymology.
I've never even heard that word before. And
I certainly haven't heard that in a very long time, and I don't want to go back to that English test.
No. It's painful for all of us.
Yeah. So when we were obviously talking a little manipulation, sales, so giving, so tie that all in for us.
Yeah. So, right, Cliff said manipulation, but at the end of the day, right, sales, our job is to ask questions, understand what our clients' needs are, and we are, in effect, just giving them what they want.
Correct.
Right. So the best salespeople, right, are the ones that aren't pushy. They're the ones that ask the best questions and are the best listeners.
No doubt.
Right. And ultimately, our job is not to sell, right? It's just to give the client what they want.
Well, we're all advisors, right? Like we all give solutions to problems, right? Like we aren't per se selling anything. You know, I certainly don't feel like I sell anything. I don't think you guys sell things. Seth certainly doesn't sell things. We all provide a solution to whatever the problem is.
Yeah. Well, and what I was saying about manipulation is all you're doing when you're manipulating a person is getting a reaction of emotions, right? And Martin had said this earlier, we have to ask the right questions to drive those emotions to get to understand that person and what they're looking to accomplish or what really keeps them up at night, so that we can provide solutions to give them that peace of mind. And so, you know, I said this, I think my wife was just like, what do you mean you manipulation? I'm like, it's one of those words that's driven into your mind that it's like has a bad connotation, but it's really not. Sales, another word, like in the way that Martin defined it, I was kind of mind blown, but
you didn't know it's
that makes.
I don't feel like I'm in sales. Like I feel like I'm in relationship sales. Like I'm a coach. Like I like therapists. That's I've heard a lot of people use that over the last 5 years. That's a great way to describe what we do. I use coach, similar. I provide financial wellness, and I coach and provide education around what clients can do and what opportunities they have. And that education allows them to make their own decisions, which ultimately is sales, but it's a more relationship-based, educational-based.
Yeah, it's consultative selling.
Yes.
Right? Like
There's a great saying, man is best convinced by things he himself finds out. Right? So
can we just have Martin host the podcast? Because this dude is fucking filled with good takes.
Every time he just pulls one out.
This dude's talking about goldfish.
Well, sometimes they get too big for their bowl. Cliffy, you said something earlier that Seth and I talk about all the time. So, you know, my background is trust and estate work, and real estate is sort of an ancillary service to that. And I talk to Seth all the time about one of the most devastating things for me is to sit across from somebody after they lost their spouse and they realize that they have to sell their house, right? They know that they cannot afford it any longer on one income. And you talked about getting your start in the business on cold calling. I think you called it mortgage protection program or mortgage protection plans, right? Like, I think that this is such an underutilized, valuable piece of the market that is being missed in life insurance, right? Like, Seth and I talk about it every time. We see these dual income young families buying these $800,000, $1 million houses. Both parents work. The kids are like 2 and 4. And he and I both know that if the shit hits the fan, like they're not going to be able to keep this house. And why people aren't, focusing on that is just mind blowing to me.
Yeah. It's funny because the most emotional thing happened in my first 6 months from those mortgage protection leads. That really kept me in the business and actually made me, all I did for probably 6 years was talk about that story, and I'll tell it quickly. I went out to a house in Brockton. At that point, I would drive anywhere in the state of Massachusetts. Or
where's Brockton?
South.
Oh.
Off 24.
Yeah, so I was living in Boston, so it wasn't too far away, but Brockton, very blue-collar town. And I went in this home from a mortgage protection lead, and the woman was looking for life insurance in case something happened to her to protect the home. She knew why I was there, and the boyfriend was there, the daughter, this woman's daughter, and her granddaughter, right? And this woman had this aura about her, like she knew what was going to happen, right? And the son, not the son, but the boyfriend, he tried to say everything he could to get me out of this house. This guy's just a car salesman, this, that, the other thing. And
all in front of you?
Right here, within
wow.
10 feet of me. And I'm just kind of, I stayed to the script of like, I'm here to help her and I'm going to listen to her. And she was, I want to get life insurance. This is what I want. I want to make sure my family is protected, my granddaughter and my daughter. And there's an agreement that you take that basically gives you temporary life insurance coverage if you take the first premium check. And I learned that, when I first started in the business. So I took every application, I would take that check. So I took this from her. And 3 weeks later, that lady had a massive heart attack and died.
That's crazy. Wow.
And MetLife paid the claim. And I was...
Are you tearing up?
No.
Oh. It'd be good if you were.
I did have some feelings back then about, like, I did my job.
No doubt.
And I did a really good...
Absolutely.
I did this family a huge... By sitting there and sticking through it, because not a lot of people would have taken that. They would have left.
100%.
And I stuck through it. And the tune had changed quite a bit when I saw that kid again.
Mm-hmm.
And I would just tell that same story anytime I was involved in a life insurance sale from there on.
Mm-hmm.
And I would close like 95% of the opportunities. Not all of them would stick, right? But that story alone. And I felt like just by telling that story, I was doing a service because that stuff can happen. And like you're talking about, it's incredible to me that there's that many people out there that don't have life insurance. Like, I do videos now about it, and I'm sure you guys have seen them. Like,
I watch them with bated breath, waiting for them to drop every day.
And one of them was about like a cup of coffee, and like seriously, like if you took the money you spend on a cup of coffee,
I buy 2
every morning.
$9.58.
And you go to the car wash every day.
Well, that's a monthly pass.
You could cover
$29.99.
$1 million of coverage with the amount that you spend on one cup of coffee a day.
Mm-hmm.
I don't know if that's true. I'm overweight, so I'm a little more expensive, I was told.
You should never not have life insurance because of the cost of it. Term insurance is dirt cheap. It's eminently affordable for everybody.
Eminently. The words
and it's
are impressive.
You have to have car insurance, right? By law.
Compulsory, we call it.
Yep, compulsory. You have to have these certain things. People buy these insurance for their cell phones, but they're not willing to insure themselves.
Right. They can't afford to fix the cell phone if it breaks, but what about where are they going to live if they die?
Their family.
Right.
And right, if you're a single guy in your 30s, like really, why do you need term life insurance? You really don't, right? But if you're in a business and you have a business partner, you absolutely need a buy-sell agreement and you absolutely need life insurance on each other so that the business can then pay out the partnership.
Yeah, we talked about this the other day, actually.
We sure did.
And I would say 9 out of 10 business owners that are in partnerships that I meet with do not have buy-sell agreements and or funded buy-sell agreements.
What, just real quick, can you just explain that for the people?
So they don't even have a written agreement in place.
Meaning what happens if one of the partners dies?
Get sick, disabled, anything. There's no plan. And I understand, right? We all, especially entrepreneurs, we get going, right? We're heads down. We're just trying to grind for the next dollar, do what we can. Then we get to a level of success where we're making money, and then we're trying to add to the team, add to the revenue, and it's just like all these other things that we think of. We're not thinking about the overall plan. You know, what happens, what if, the what ifs. And I've seen it so many times, and then I sit down and have these conversations, and people still, they don't want to take care of it. And my fear is like, I don't want to hound people, right? I like the approach that Marty had where he would call and he would, ask permission in a way that kind of forced you to say, yeah, like, give me a call.
But he used those words too, probably, when he called.
Yeah.
I did.
All the big ones?
All the big ones.
And it's just, it scares me that I won't be doing my job by not getting that information out there. And so for me, that's where I'm at in my career. Is like, I need to provide as much education. And if I have to do it through social media or through podcasts, I'll do that, because you know what? If the information gets out there, people will learn. Eventually, they'll take advantage of that information and implement it themselves.
I feel like there's so much negative connotation just about life insurance in general. And like everybody's got an opinion. Mm-hmm. Well, everybody who's like a little bit older who has life insurance or had life insurance at one point, probably term or whatever. I don't know. It just seems like I remember like probably at this point, I don't know, 10, 12 years ago, I just met somebody who was super opinionated about it and told me how such a scam, blah, blah, blah. So could you guys just quickly talk about like the two different options of term and whole life and kind of the difference between the two, and just super high level, just so people, I think, kind of get a grasp, because I think that's a lot of misinformation. And I don't know if you guys interact with that when you're talking to the consumer. Like people just feel like they know about it. And I'm kind of curious, like, I don't know. I've never had the thought that it was bad to have, you know what I mean? So like, and obviously I'm super uneducated in compared to what you guys do, but at this point, having term and also whole life, I think.
Yes.
Insurance, right? Like there's just benefits between the two. So could you just, one of you guys quickly touch on that?
Sure. So from a high level, right, there's two main types of life insurance. There's term life insurance and permanent life insurance. And term life insurance is, here's a simple analogy, real estate. It's like renting an apartment. So I'm going to go to an insurance company. I'm going to get term insurance for a term of years, just like the name implies. So 10 years, 20 years, or until a certain age. And as long as I pay my premiums every year, I've got coverage. If I pass away during the term, then that death benefit pays out to whoever my beneficiaries are. And if I outlive the term, which is more likely than not, then I just paid for the privilege of having insurance. So it's just term insurance is just a pure risk product. It's a transfer of risk from yourself to the insurance company, just like when you buy car insurance or homeowners insurance, right? So the upside of term insurance, right, is that it's eminently affordable, right? You should never not have term insurance for cost. It's that inexpensive, assuming you're healthy and you're not a smoker. The downside of term insurance is that you're probably going to outlive it, right, statistically speaking. And so sometimes folks feel like, hey, I'm putting, money down the rat hole here.
It's car insurance.
It's car insurance. Correct. And so on the other side of the spectrum, right, you have permanent life insurance, which gives a permanent death benefit. So it's not a question of whether this pays out, just a question of when this pays out, right? So there's guaranteed death benefit. And then also you have equity that builds up inside your permanent insurance plan, just like you have equity in the house that you own. And that's the living benefit of life insurance. So high level, those are the two different types. Cliff, I don't know if you would add anything else, any other color.
Yeah, I think that the education and, like you said, the negative connotation around life insurance as an asset class or tool it's something that I think that we need to provide more education around. Like, it is an incredible tool. The wealthy have used this tool forever. The Rockefellers used it to pass on generational wealth. So every time someone would pass on in the Rockefeller family, the trust owned life insurance on the family member. The money would flow back to the trust, and then anytime someone was born, the trust would buy life insurance on the person who was born in their family. And this has created an incredible amount of wealth in that family. That's one thing about it, right? The estate planning piece. The other piece is like that cash value, that equity that Martin was talking about, can be used throughout the entire process of owning this tax-free.
So talk a little bit more about that, right? Just pretend like I'm a knucklehead and I have no idea what you're talking about.
So Seth's cash value or equity in his policy, right? Let's say you had $50,000 available cash in that contract, right? You can actually take a loan against the value of the life insurance, so the money doesn't leave the policy. It continues to grow and compound interest. The insurance company will tack on a loan rate, right, for that insurance that you're loaning yourself. But you take that loan and then you go and use it for whatever that you want to use. Let's say it's a house flip, right? So instead of taking money out of a savings account, right, now that's gone. You're actually taking money from, borrowing it from yourself, using it for a transaction. You can make money in two places at the same time. Because a lot of times these whole life companies, they're going to pay you a guaranteed interest rate and a dividend. And typically that will, if it's a non-participant loan, it will wash that loan rate. So
it's free money borrowing from yourself.
I can't say that it's free money, but there's when it's properly designed.
Is it lower than 9% interest?
Right now, I think it's like 5, depending on the product. I mean, there's 2 different types of loans. There's direct and non-direct, and you have to there's a lot of education around this. So this type of concept has to be architected by the right advisor.
Right.
And you have to use the right company, right? See, there's the Northwestern Mutuals, the Mass Mutuals, the Lafayette's, the Emeritus, like the strong whole life, mutual companies have all paid dividends for over 120 years. So I can't say with certainty they're going to pay them every year, but
history would show you that they're pretty good at it.
Good track record.
Yeah, and they all come with a guaranteed interest
Class
rate.
A rated?
Yeah, all A or A plus,
A to AAA.
Yeah, and that type of concept it's a banking concept. Nelson Nash is the one who kind of mainstreamed it, and he brought it out there. He called it infinite banking, and he taught business owners how to basically finance their vehicles through this, finance equipment, do things like that, where you become your own bank.
Yeah, super smart.
Yeah. So instead of you borrowing money from a bank, right? They're going to charge you interest rate. You charge yourself the interest rate. And if you're a business owner and you own the policy personally, you can actually still get a tax deduction from that business when designed correctly and working with the right account.
Yeah, super smart.
So I know that you both do things other than life insurance. We spent a lot of time talking about life insurance specifically, but you're both full-on comprehensive wealth managers and look at the whole plan. And I'm sure life insurance is a piece of sort of the whole portfolio that you guys are looking at. What other pieces of somebody's wealth are you guys trying to look at and make sure that you're maximizing? And, in this environment, especially, what are you looking at with new clients that you're bringing on?
Good question. So we are a comprehensive financial planning firm, which means that we're looking at all the different areas of planning. So that means helping clients understand and know what are we on track for retirement. That means constructing a wealth management portfolio for them, helping them save and invest for kids' education. We talked about the risk planning. We don't give specific tax advice. We're not tax attorneys or CPAs, but we are tax strategic in how we help clients think about paying taxes in the future. Right?
That was said like an attorney.
Thank you. Yeah. So almost all of our clients are working with good CPAs and tax attorneys, and their job is to help look backwards and get all the deductions they can. Our job is to partner with those folks and look forwards and help clients understand that the way to optimize tax savings may be down the road in how you save. So saving in tax-free accounts like Roth 401ks, Roth IRAs, insurance. That's very strategic. And then the last piece is cash flow management, helping clients understand what's my capacity to save and helping them to save more than they would left to their own devices.
Yeah, our firm works this exact same way. The target markets that I have are, high income earners in their 30s and 40s, business owners, because like Marty, my 2 parents were both business owners growing up. And so I just gravitated towards that, and I felt like that was a untapped market, people who need a lot of help. People have a business with 2 to 20 employees, right? They're just, like I said, they put their head down, they go to work, and they create this business, and all of a sudden it's making money, and they don't have someone kind of coaching them, right, on tax strategies, on what retirement plans are available to them inside their plan. How can they, even when it goes beyond that, is like, hey, are you incorporated correctly? Are you working with your accountant to make sure that you're incorporated correctly and getting the most amount of deductions you can, right? I want to help coach them, and if I have to introduce them to a different CPA to show them that this is available to them, like Martin said, I'm not a CPA, but through experience and utilizing all the tax strategies for myself, having multiple businesses, I've educated myself about how these things work, and I want to provide that education to these types of clients. And we do things very holistically. It's all about planning. It's the retirement plan piece, the financial plan, which we try to build like a financial foundation, give you all of the information of like, here's your current scenario, find out what your goals are, what your expectations are, and kind of build that plan around that plan, right? We try to build that plan around what you're looking for. And the retirement plan is one thing, like wealth management, risk management, all those things.
So at the very beginning, one of you started talking about sort of the outlook for the markets and, something about a recession in Q3. I'm 45. I graduated from college in 1999. That was my second year out of college, and we hit the .com bubble. I graduated from law school in 2008 when we saw the housing market crash. So I've been in tune to sort of hitting my stride right at the time the economy falls apart. So are we looking at a, 2008? Are we looking at some, I guess first, are recessions all the same?
Good question. No.
Okay.
No.
Elaborate.
Sure. So
can I just clarify real quick?
Yeah.
So when you say 2008, what specifically about 2008 are you worried about hypothetically repeating?
The economy fell apart. No, just recession in general. I was not like specifically targeting the housing crisis, but like the impact the housing crisis had on the
rest
broader
of the
economy. Is that like, are we talking a 2008 economy? Are we talking a 1991 recession? Are we talking a 2001 recession? Like what are we anticipating here? And I know that we're not going to hold any of you to this.
Sure. So, caveat, I'm not an economist, right?
Oh, shit.
And
you just use all the words?
Yeah, I'm not going to forecast here. So,
the name of the podcast is The Word?
The Word.
Yeah.
Yeah, I like that. So, there's a bunch of really, really smart economists that I follow. Brian Worsbury at First National Trust is one of them. And those fellows there, their job is to look at the economy, predict what's going to happen. And if you read them, what their prediction is, mild recession coming in 2023 or early 2024. And the reason for mild is they think there's a lot of good fundamentals out there in the economy right now. There's really strong job growth still, right? So we're adding.
Unless you're at Twitter.
We added over 300,000 jobs last month. There's been no substantial tax reform for the last 2 years, even though Democrats have controlled all three branches of the government.
But we're sunsetting in 2027.
Potentially. Yes, potentially. So that's good for business.
Sunsetting what?
The Trump tax cuts go away in 2027.
Got it.
That's a lawyer word. Sunset.
It's a corporate word.
Might be. I learned it in law school. I didn't do corporate.
So yeah, who knows, right? It's an unknowable what's going to happen in the future. I would argue that for folks that are listening, if you're in your 30s, 40s, 50s, if you're still in saving and investing mode, then you need to flip a switch in your brain and look at this as an opportunity, right? To get ahead, to separate, to buy more shares of the great companies of the world at a discount.
Like Twitter.
You can't buy Twitter anymore.
Oh, shit.
You keep saying it. You love Twitter.
I just like
Twitter's going to blow up.
It is.
I don't even have a Twitter.
You should probably get one because he's going to create an app to end all apps.
If you want another subscription, $7.99, get a blue check.
You can be verified, yeah.
Oh.
Yeah. I've started.
Is that what it is?
Yeah, he monetized it already. He basically was like, we lose money. And so if you want a blue check mark to be verified on Twitter, it's $8 a month.
Well, you have to get to the verification.
I don't think so. I think I can just buy it now.
For $7.99.
Yeah.
A month. I mean, it's kind of smart.
He's basically diminishing that blue check mark.
Yes.
Yeah, and don't quote me on that. I could be completely wrong, but like to keep your verification, if you did in fact earn it, it now costs money. It's a monthly subscription. He changed it in like 48 hours.
Like Joe Blow, who has 2 followers and 6 likes, can't sign up and get a blue check mark.
I don't know.
There's a reason behind the blue check mark, like getting verified.
It's like Instagram. You had to hit a certain quota.
Facebook, same thing. Like,
but all he did is whatever it was, he monetized it.
If you don't have it, you have to pay to keep it,
or you're going to lose it. Yeah.
Okay.
But let's go back to the economy.
We could spend like a whole podcast on what's happening, but so just my point of view from housing, obviously everything in 2006, 7, 8, driven by no income, no asset verification, no credit, multiple loans to a single borrower, crippled the mortgage economy. All those adjustable rate mortgages came due. Multiple people lost their homes. They all had to sell them. The average consumer had 2 to 3 homes for no reason. They were renting them, making money. They lost it. So the mortgage industry and the lack of banking regulation ruined the housing market, and the housing market ruined the economy. This time, inflation driven, again, and you guys can chime in, you're the money people, like inflation from printed money, adding money to the economy made things run up. And housing in general right now, I mean, there's still incredible demand. It's curbed, no doubt, from all the interest rate hikes, which again, interest rate hikes from the Fed do not affect the mortgage market, to be clear. We can spend
directly.
Obviously, there's a lot of the times the mortgage bond market reacts well before the Fed does, because it knows what the Fed's going to do. It's out there, right? And so housing, from my point of view, sure. Are we seeing some walkbacks in value? No doubt. And will values come down? Yes. I think, and I shared that last time, I think they'll be down a little bit more than I think the average people will, just because we've had such a run up in value that we just simply can't sustain anymore. And so there'll be a slight correction in housing, but just like everything else, I think it's going to be, a quick J curve, and it's going to just shoot right back up, because the second rates come back down, the general public will jump back in, and the biggest home buying group of folks right now are in their prime buying years, being millennials. And oh, by the way, you already mentioned it earlier, the biggest wealth transfer in the history of the world is happening right now, right? So all things from a housing, clear. So I kind of agree with you. You want to buy at value right now at a discount because shit's on sale. It's right now, specifically in housing. And so from a 2008 comparison, this is not it in housing, to be clear. But I'm very interested in some stock market and inflationary conversation on kind of what you guys are seeing. Is it very similar?
Yeah, good question. So the the value today, I think, is in making sure that you've got the appropriate time in the market. So just to borrow a quote from Warren Buffett, it's time in the market, not timing the market, that's going to be predictive of long-term wealth. That being said, when I look at the S&P and I see, the 500 greatest companies in America, at a 20% discount, I just think that's a buying opportunity for folks. So dollar cost averaging, moving money from cash. If you're sitting on the sidelines with large amounts of cash, you're actually going backwards net after inflation and taxes. So I think it's a great opportunity, as I said, if you're still in those saving and investing years, to get in.
Yeah, I would agree. It's like Amazon Prime Day for the next 2 years.
Is it a write-off?
If you did it the right way.
So, and you just
does your wife like Amazon Prime Day?
I can't.
I mean, I think everybody loves
crazy how many Amazon boxes show up in my house.
Yeah, I joked when we moved we should.
I think your wives would love each other.
I joked that we should get one of those cardboard balers and just put it in the basement because, we have to make bales so often. But so you just said 2 years, right? Like, is that your timeline before the market rebounds? And if it's not, elaborate on that.
I follow economists the same way. I'm not an economist, right? But I follow well-educated people who have a track record, right? Like Martin does. And from what they're saying, it just shows that there's going to be some type of recession. I mean, it's kind of basic economy, really, when you look at it, that it's going to happen, right?
Well, we haven't had one since 2008.
And like Marty said, I mean, the most obvious thing right in front of your face is, right, if you go to the store and you can buy something for 20% than it usually is, it's a good time to buy it, right? And I mean, he just pointed out the market's down, 21, 22% over the year. Mm-hmm. All those major 500 companies the U.S. thinks are the best 500 companies, right, are on sale. So, and I like doing things, like Marty said, dollar cost averaging, because the market can fluctuate on a daily basis. So if you do it consistently every week, every day, every month, over time, the average cost per share is going to be less. And if your timeline to, access those funds is 10, 15, 20 years, I mean, this is absolutely, yeah. I mean, if you're looking to, if it's money set aside to purchase real estate, right, I probably would give you different advice because you're going to need
liquidity.
It's not. I mean, it's not that the money's not liquid, right? If you invest it, it's just that if you hit one of those, you could get caught in another downswing, right? And that's it's all about the plan, right? What are you trying to accomplish? If you want to buy real estate, I think it's going to be a great time to buy real estate.
So
I agree.
Have been to a lot of seminars and dinners and breakfasts in the last month or two with the chief economist from this place or this guy. And the most interesting fact I keep hearing over and over again is that if you had taken your money out of the market in March of 2020, you would have missed the biggest rally in the market in years. What are your thoughts on that?
The best 100 days.
Best 100 days.
In U.S. stock market.
Well, I heard it at my BNI.
That's right.
From Marty.
Yeah, it just goes to show, right, there that the bottom is an unknowable place. There's nobody that's going to be able to predict with any type of consistency, this is the bottom, right? And so when you get out of the market, you just amplify the difficulty of financial planning. Because if you stay in the market, you're just making one decision. It's that I'm staying in. And that's a simple decision. And if you do that over time, you will capture the return of the market. When you get out, now you've made it more complicated. Now you have to make two decisions. Okay, so I've got out. That's one decision. And then my second decision is, when do I get back in? And then that just brings in a whole host of fears and anxieties and stressors, because what's the leading economic indicator that you're going to assign value to tell you that it's the right time to get in? And whenever you assign that leading value, the leading economic indicator value, you're only going to be looking backwards, right? Because the data is only going to be positive once you're looking backwards. So you're already going to have missed the upswing in the market, is the point.
Yeah, and I think that the important thing to understand is when people say history repeats itself, it's a very generic thing to say, right? History repeats itself in a very basic way. We're betting on the human race. We're saying the stock market's going to go back up, the real estate market's going to go back up. That's a bet on the human race. History repeats itself because we're going to find a way as a world. We're going to find a way to make it better. That's all we're really doing, generically speaking, right? So I'll bet on the human race again, because if the human race falls apart, we're all doomed anyway, right?
Yeah. And you have lots of empathy.
I do.
Yeah.
I don't know. I want to see what my empathy score is. I can't imagine.
You're going to have to do a strength finder.
From 31 to 1 being the most amount of empathy, right?
Mm-hmm.
I remember 4 of my 5 from back in the day. I bet they change.
I would assume they fluctuate over time.
They evolve over time.
Yeah, 100%.
Yeah.
100%. All right.
I have a dying... Oh.
No, go ahead.
You go.
So I was just going to talk a little bit about something I wrote down that I wanted to ask you guys about. And I think you and I talked about this several months ago. How do, there's a lot of press out there around presidential cycles, specifically in the midterm, front half versus second half, and how the bottom, I think statistically, and correct me if I'm wrong on this, the bottom in any president's term of the market is the second full year in the first half. It's always terrible. And then the best is the following 18 months that comes out of that. So we're in that right now.
Today's election day.
We're officially in that back half, 18 months today, last month, whatever. And it seems as if statistically that will continue, because obviously we don't know where the bottom is, to be clear, but more than likely there will be some rallying that comes in the coming months. Hopefully.
Yeah, I'm familiar with those statistics. And Marty, I don't know if you know this, but if someone's in their second term, is it the same? Is that cycle the same? I think it varies, doesn't it?
It's a good question, because we just had an email this morning with this information. So
timely.
The second year, that midterm year of a presidential cycle, is oftentimes the worst, I believe statistically, the worst performing. I don't know if it holds true for all 4 years, although I do know in recent history that the best performing president was Bill Clinton The worst performing was George Walker Bush. So there's no correlation between, in my reading of the material, between Democrat and Republican. And I don't know about the next 4 years. It's a good question.
Yeah, I just didn't know if there was information around like when they're consecutive terms, like consecutive 4 years.
Well, we wouldn't have any on George Walker Bush because he only had one term.
Understandably so.
Yeah.
And so, like, was Obama's...
But Barbara Bush, if we could, I mean, she was a legend.
It's true.
Yeah. Moving on.
I mean, that comes down to, I feel like that's basic economy too, and basic, like it's, someone's coming in, right?
Right.
Their team's going to make a bunch of changes, and then you're feeling the effects of the changes, and then it's going to rebound.
Right.
Optimistically, I'd say that would look good for next year, but...
Right.
Most presidents also lose the House in their first term, in the midterms in their first term. So, like, it is...
More than likely what will happen right
tonight,
now.
right? Like tonight we will see a flip of the House.
Yeah.
We will maybe see a flip of the Senate, which will probably just lead to total gridlock in Washington, and we just won't see anything.
Interesting that you use that term gridlock.
Yeah.
Because markets actually respond much more favorably to gridlock than they do to
Policy changes.
Right, policy changes. So the best forecast for the market going on historical data is if the House and the Senate flip tonight to Republicans, and obviously Biden keeps presidential.
And that should do well for the market in the next...
Yes, because it means there'll be no substantial policy changes. Tax law will stay intact.
Interesting.
But
it's a reaction.
It's reactionary all the
it's
way.
It's all reactionary, and it's... I think Marty brought up a good point earlier, and like, if you're listening to this, it's every plan is individualized to the person, right? You know, you can look back to see what history will tell you. There's no... If I had a crystal ball, I wouldn't be sitting at this podcast, right? I'd be sitting on a yacht somewhere, like looking at my crystal ball, like, oh, where am I going to go next, and what's going to happen, right?
Would you send a private plane for us?
Absolutely.
Thank you.
We go to an island.
Yeah.
And we do the things that we talk about.
It would have to be a helicopter.
They would
so
do
we
it
can land on the yacht.
Yeah, that's a good point.
And I wonder if Amazon would be able to get the boxes there.
Your wife would find a way.
They would use drones. They would use drones.
She would find a way to make it a write-off.
We could bring them to you.
In this story, I have a black matte colored super yacht.
Oh, nice.
Yeah,
nice.
Just want to throw that out there.
That's pretty cool.
I like that. I like a black matte. Seth would have navy because
I think I would
branded.
Matte black is
really?
where it's at. Yeah, I'd want to be discreet.
Yeah.
You know?
Yeah. On your super yacht?
In my super yacht.
Oligarch super yacht.
But if I had that crystal ball, right, I could get in and out of the market, right? I could tell you, like, I got out in March, and then I bought right back in April, and I just crushed those 100 days.
Yeah.
But it's just, I mean, we can't anticipate those things, right? As professionals, I mean, we can study, we can do as much market timing and try to, adjust, readjust, rebalance, but ultimately it's, what are you trying to accomplish individually, and how can we coach you through all the experiences we've had or the experiences our team or companies have had, and help you to get to where you want to go? What are your goals? And I think that's like that's what we need to get out to the public, is that's our job, is to coach you and kind of give you that therapy you need to walk you through those worrisome times, right? And there's going to be opportunities. There's going to be times where I just kind of mind blanked.
Yeah, that's okay.
We did that a lot more last week, so I'm glad somebody else did it today.
I have a very important question. Do you guys get your hair gel at the same place?
Good question.
Yeah.
I don't know.
I mean, you have very impressive hair, both of you, and it is very similar. Do you have the same barber? I know that we used to have the same barber, and you now have a barber truck that shows up.
Wow.
Yeah.
Tell
us about your barber truck.
That's next level.
I don't know if we have time for the barber. That might have to be a dinner story.
Has a barber shop.
Yeah.
A very successful one. And he actually started a mobile barber business. Where it will go to different, companies for the day. You have to book 5 or 6 haircuts for the day.
My suit guy.
Yeah. These haircuts are
cheaper than
$55. Jesus Christ, man.
I mean, you're looking at $100+ haircuts, but
But if it looks that good, maybe I'm into it.
This shit is
value
free,
your
man.
time,
I can
right?
do this to you guys
The
anytime
time
you
that
want.
you sit at the barbershop, like you can't be on
Oh,
the
I go on
phone.
Saturdays.
Yeah. I
Okay.
ain't got time for that, man. I'm selling houses.
Yeah. You know what I mean? Time value, money.
Yeah.
Like,
You
what's
both
my
have great
time
hair,
worth?
though. The point is, you both have very good
Appreciate
hair.
All right, I have some real questions because
Yes.
we're running up on time here,
Yeah.
and we got to get to dinner. So I want to just rifle off a handful of questions to you guys, if that's cool. Ready?
Yeah.
And if you guys could just both kind of take them and answer, that'd be awesome. What do you think the biggest financial mistake people are making, like in just last couple of years?
Biggest financial mistake people are making in the last couple of years has been market timing, I think, because we've gone through such unusual times.
Sure.
So again, market timing almost always leads to lower rates of return. So if you want to hire yourself to lose money, then you should be a market timer.
Makes sense. And what about a win? The biggest financial win? Is it the same?
Staying invested. Yeah. It was
Very cool.
The first time all of us had lived through a pandemic, so it was an unknowable variable. And if you thought this time was different, nobody would have blamed you. And so having the fortitude to stay in the market was a really beneficial decision.
Cool. What do you think?
The biggest mistake that I think that financially in the last years I've seen people make is we had a serious bull run.
Yeah.
And I think that a lot of people who I would consider amateurs were trying to market time and invest themselves.
No doubt.
And the biggest mistake is I see that people are trying to be their own money managers.
Yeah.
And they're not doing so well with it, right?
Not now. No. Yeah.
And they did. Like, you could have taken a dart,
could
though,
have.
and thrown it at the board and been and won in some capacity for a good 10 years. And
You're so right. And I this is probably a bad story to tell, but first off, just to show some humility, I was an idiot and got out of the market when the pandemic hit. Probably one of the biggest financial mistakes I've ever made in my life. Crazy. I don't even want to know how much it cost me. So please don't tell me, Martin. Also similarly, very stupidly, when I sold my house, we were building, and there was about a 5-month lag of sell to close on the new property. And so I threw like a quarter of the proceeds, like in Robin Hood, like a knucklehead. And dude, I freaking killed it because it was December 2019 to like March of 2020. Like, I freaking killed it. I think it was like a 200% return, and I thought I was a freaking genius. well, you know what happened? I by the way, like, for some crazy reason, like, I screwed up on my math, and I had to liquidate that to close. I thought it was free cash, and it wasn't. So luckily, by accident, I got out of the market, right? But I left like 10 grand in, something small, right? And I freaking lost all that money because of what happened. And like, I was just left with nothing in that stupid Robinhood account. So like, the joke I made to several people was like, dude, I didn't know what I was doing, and I looked like a freaking genius, and I made a bunch of money, and that was cool. But at the end of the day, completely by accident, I got out.
yeah, I just ask people, like, when they'll call me and be like, what stock should I be at? I'm like,
Anyone, it doesn't matter.
And it's just like, I mean, I'm like, that's not the business I'm in. Like,
Yeah.
I'm not in the business of helping you pick stocks. If you want that hobby, like, I'll show you which part of your portfolio you can get away with putting that type of risk on. I go, but you might as well just sign up and get an online sports book.
Or
and,
could we go to
start
Encore
gambling.
and play roulette?
It's the same thing, right? You're going to run into the same, you're not a professional gambler. You're not a professional money manager. Like, you're essentially gambling.
Buy some Dogecoin.
I think I still have some. Okay, so just a second question here. General advice for anybody who is potentially receiving this wealth transfer right now from,
Ooh, good
you know,
question.
like, what would you tell them? Because they might come into some legendary money, right? We've already talked how it's the largest transfer of all time. I don't know monetarily what that actually means, to be clear. Are people who usually inherit 200 grand inheriting 2 million? I have no idea, right? But in your own words, just tell, like, what would be that, elevator pitch to those folks right now?
Yeah, great question, Seth. So
Thank you.
I always tell clients, you want to know what mom and dad's situation is, because good or bad, you're inheriting it, right? So first step would be start to have the conversation with mom and dad. Hey, how are you positioned financially? Because I'm going to inherit that, and then start that conversation there, right? And if mom and dad don't have an advisor, then it's a good time for you guys to do some generational wealth planning, because when done right, you can be really effective and tax strategic.
Yeah, I'd agree. And I think that if I was in a situation where I didn't know, I would want to hire an expert, right?
100%.
I would want an expert who's going to kind of guide me through that and understand like where to go next. And what I would do personally, like for someone like that, is say, hey, like, do you have a CPA? Do you have an estate planning attorney? Like, find out what coaches and what the team around them looks like right now. Because when you come into that kind of money, you're going to come into a lot different problems, right?
For sure.
So what we missed in that, and I think that in my role, I see most often, is that the biggest change or the biggest problem when people inherit their parents' money is they move it and they get it out of the advisor that their parent was with and they bring it to somebody else. So the biggest challenge facing the wealth management world is how do these guys stick the relationships and keep them sticky with that next generation, right? And that could be a detrimental flaw in the inheritor's plan by leaving the people that sort of help build this asset.
Yeah. Great point, Brendan. So I think it's incumbent on us as financial advisors to meet the generations, right? The generation above, the generation below, develop those relationships. And also, I think as an industry, we do a really bad job of talking to spouses. We usually just focus on one particular person in the relationship, that person who's the CEO of the household, and that's who we always call, and we leave the other person feeling left out. So what happens, and this most often happens with men and women, is the advisor has a relationship with the man dies first, the wife inherits the money, and then she leaves the firm because she never felt heard. So huge opportunities in our world to do better there.
Good stuff. I think that transition to, like, how do you get the spouse involved? Like, how do I approach my dad, right, who's widowed, and like, hey, Dad, can we talk to my financial guy? Like, it's just such a weird conversation to have, right? So you would think that hopefully, and I have no clue, that like the ducks are in a row, right? It's just a weird conversation to have as a kid, or even like, I don't know, most of us are parents, right? Like, that's just a weird conversation, you know, to have. So I think that's really, really good advice. Okay, another question. What sort of advice would you have to a potential home buyer or home seller, knowing like the economy that we're in today?
Just to kind of evaluate the overall plan of like what you're trying to accomplish. Because a lot of times I see people make mistakes financially is they just don't understand how money flows, and they'll put like, you know, there's like these old methodologies and these old thought processes around like, oh, I'm going to put 20% down, or I'm going to put 30% down, or I'm going to buy this in cash. And like, ooh, to me, it's like, oh, it makes me cringe. It's 2 years, prior to this year, obviously with the interest rates the way they are, like I would cringe every time I'd hear my wife on the phone talking about a cash deal for $1 million. I'm like, oh my God.
I always tell people to try and put as little down as possible.
They were giving money away, 2.75. Like, that's free money. Inflation's historically about 2.25% a year. So if they're loaning you money at 50 bips above that, like, that's free money.
No doubt.
Why would you put more money down into a house?
Yeah.
Like, when then it makes it harder on yourself to pull that money out. Right? When you put money into a home, it's not really an investment. It's a home. It's a place you live. If it's an investment property, then we're talking about something different. In a home, it's a place you live. There's upkeep. And if you do the math, like over a certain amount of years, like the plumbing, the new roof, the boiler, et cetera.
You're paying 2.5.
You got to find someone who thinks like that. They can coach you around, like, do I put 5% down? And then if I do, like, what does that look for the PMI? How does that look? And then where would I put the money other than that? Another thing that I cringe around is when people are like, oh, I'm going to double, this is like Dave Ramsey stuff, double pay my mortgage. Like, I have clients who came to me that were double paying their mortgage with a 2.75 interest rate. I just want to get it paid off. I'm like, that's not a good idea.
Yeah, listen, toss a couple extra $100 at principal. Pay it biweekly if you want. Makes a big difference, I guess. But I mean, it's cheap.
Why would you do that if you?
No, I mean like so pay biweekly because the way it compounds. My understanding, like if your payment's $3,000, make 2 payments of $1,500.
Yes, but the double payment,
you end up making one extra mortgage payment a year, cutting 7 years off the life of the loan by doing that.
Right. Principal wise,
yeah.
And I think that there needs,
but that's different than what you're talking about.
I'm talking about double payments, paying, if the mortgage is $1,500, they're paying $3,000 every month to try to pay down faster, so they don't have debt.
Yeah, it's
silly. Debt is incredibly useful, and leverage is incredibly useful if you understand it, or you have the right coach who can kind of coach you around how it works.
Well, and that's making your money make you money.
Yes,
right.
It's the wealthy do.
Yeah,
100%.
The wealthy are always leveraging things.
Well, you and I have gone down rabbit holes on cash out refis and like making sure that you're, utilizing your SALT deductions. Although we got screwed in the Trump tax cuts on the SALTs up here, but there's no sense in leaving that on the table, right? Like if you own a house, to not at least max that out, like doesn't even make sense. And then when money was free,
right?
I mean, none of it made sense to take that money out of the market, put it into a piece of real estate when you could have the real estate, the money in the market, and carry the debt.
We'll bring it full circle here.
Bring it full circuit, Marty.
So Elon Musk financed the Twitter deal by leveraging his Tesla stock. He didn't throw down $44 billion in cash. He just said, use my Tesla stock as collateral.
Like on the life insurance loan.
Like on the life insurance. Outside that. So there was a great article in the Wall Street Journal or the New York Times, I forget which one, at the beginning of the year, but it just said, the rich buy, borrow, and die. So there's a whole niche industry in planning that revolves around the 1% where they never actually pay tax because they're buying assets, they're borrowing against them, they're collateralizing, they're leveraging, and then when they die, their kids get to step up in basis on those assets and taxes are avoided.
Crazy shit.
So they're not really avoiding taxes. I mean, they're just strategically
working around them.
Yeah. Exactly. And America was built on, not.
Well, we didn't even get into like using life insurance as a pool for estate taxes if there's any left.
Yeah.
I feel like we could literally go for like 4 hours.
Yeah, we can. We got to cut it somewhere because
no, we're running up against it here. So I have one last question for both of you guys, and then just we'll hear from. Well, I actually have 2 more questions. So, question.
Famous.
Well, I guess it's 5. I guess it's question number 4.
It's 5 last questions.
Give me the best business book that you've read that kind of changed your perspective on shit.
Wow, great question. The best finance book that I've read recently is by an author named Morgan Housel. And I'm just going to get the name of the book for you right now.
My goal, by the way, of asking these questions is to read all these books.
Yeah. The Psychology of Money by Morgan Housel.
You sent it to me.
I did.
Believe it or not, I had read it before.
Not surprised with the man of your intellect.
Great book.
Cliffy.
I don't remember. I don't remember, of course, but it was a good book.
I'm a recent guy, and for the 3rd time, I've listened to Becoming Your Own Bank by Nelson Nash.
Oh, I've never heard of that one.
And it's a good one. It talks a little bit about the concepts I talked about earlier, and how to utilize them in your own life or in your own business. It's just very recent that and it was the 3rd time that I've engaged in that one.
Yeah, I read Psychology of Money twice. Still can't remember the concepts, but it's funny how like you get a different perspective depending on where you're at in life when you read it, and more advanced in your career. It's pretty cool. All right, lastly, Martin, how can the listeners get a hold of you? What's the best way to find out more about
Great
Martin?
question. So you can go to www.martinconnolly.nm.com. That's my website. You can email me at martin.connolly@nm.com. So that's martin.connolly at N as in Nancy, M as in Mary.com.
Good job. Awesome.
Do you have an at Twitter or an at Insta?
Not business related.
Oh, okay. Cliffy.
Probably best way, honestly, I'm lucky enough to have like such an individualized name. If you just put Cliff Ambrose or Cliffy Ambrose in and finance, you're going to find me. There's one one of
Do
my
you own
social
Cliffy.com yet?
No, I don't know.
We're working
about
on
that
it.
domain.
Yeah. Oh, that'd be
But
so
you know
good.
what's funny? My newest client,
Sells domains.
I asked him, what's your email? He said, blah, 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 at blah, blah, blah.com. I said, you bought your own domain name? He's like, yeah. I'm like,
I used to own BrendanWard.com.
why did you?
What happened?
I just like the credit card it was tied to, like it got compromised, and like the email changed, and like I'm sure it's gone.
You
somewhere.
stopped paying for it during the pandemic.
No, it was like I bought it in law school.
But yeah, I mean, it's Paramount Financial, Cliff Ambrose. And you put those in the search and you're going to find me.
Awesome. Well, I think we'll call that a wrap. Thanks for hopping on with us, guys. We appreciate the conversation. I think we probably have to do this again because this is pretty some interesting shit. And I think there's a lot that will happen in the next several months. And I think it doesn't matter when we're having this conversation. It's always going to be interestingly relevant to the listeners because the market and, economy is kind of always shifting. So we appreciate your time, and let's go have some fun at dinner.
Yeah, thanks guys.
Thanks, guys. Appreciate it.
Cool.